Wait, my credit score went up how much? My name is John Ross with Finance on a Budget. In this video, we'll talk about bad credit and how I raised my Equifax credit score a whopping 155 points in 4 months. I kid you not. The credit reporting system is completely broken and it can easily be rigged to your favor. You just need to make a few extra steps and you can go from defaulted loans to primo loans in a matter of months. But stick with me a few minutes, and you will find out exactly how I went from a 575 score to a 720 score. You won't believe it because I certainly don't believe it. But I did do it, and you possibly can too. Because right now, you may be thinking that you have to put up with what these banks and collection agencies do to your credit, but you don't need to take that lying down. There are definitely steps that you can take to improve your credit score and do it quickly. I have a few tricks that I have done in the past year that brought my credit scores up significantly. Stick with me, follow my advice, and you'll get your scores up in no time. I'm a freelancer, and I had previously lost my biggest client. The next few months saw me default on several loans, and I became a financial mess. But my wife's scores remained solid, so I took advantage of that. How I removed old debt and increased my credit score. Over the course of 6 or 7 months, I made several moves to get our debt under control. I raised my own credit scores significantly. The first thing I did was take out a $12,000 personal loan with a predictable fixed monthly payment that was lower than multiple cards, allowing me to focus on paying down a single debt while enjoying a huge increase in my credit score. Remember, larger personal loans damage your score less than credit cards with the same amount of money on them. Banks know that the loans can never increase, so it's a predictable number. With this money, I paid off all of my wife's small credit cards and other non-credit related things like paying up current and future bills. The goal here is to lower the DTI, debt to income ratio. With my wife's credit cards now empty, I attached my name as a joint account. This means that all of her credit history, along with her DTI, got passed on to my own account. You can use any one you want, so if your parents are able to help out, then this method works great because it won't affect their credit at all. Just hand them the card when it comes in your name, and now you can't actually use the account. But doing these two things raised my scores around 35 points across the board, so it was well worth it. The $12,000 loan wasn't enough for us, so I took advantage of a $7,500 interest-free Discover card. Doing this does not lower your credit score. In fact, it may likely hurt it by having a large sum filling up the credit on a single card. However, this does lower the monthly interest paid, and simply use that to pay extra on the interest-free card. Next, I requested larger credit limits. The larger credit limit can serve as a buffer before you actually need to pay. Just be sure not to get tempted into spending more for unnecessary stuff just because you have bigger leeway. For us, we use 2 credit cards, one for business, one for personal. I am then sure to pay them both off every 1 to 2 weeks so I don't fall back into debt. Constant usage shows the bank that we can manage our credit by paying it back early every single month. This leads us back to the bank offering us that higher credit limit. Once all the framework was set up, next came to paying off outstanding debt. As I already used the loan to eliminate the high interest cards, I really focused on getting rid of the mid to low interest debts by using the avalanche method. This means throwing all of your money into the highest interest debts first, by paying back the low interest debts second. The more that you get paid back, the less you owe. Once again, this continues lowering your DTI, debt to income ratio, and saves more interest in the long run. Credit repair companies. Lastly, I signed up with ScoreShield Financial Group. You may have heard of them, as they have a YouTube channel called Keeping It Real with Credit. I asked them to do a collaboration video with me, but they didn't seem too interested. So let me tell you what I really think after being with them for a year. My scores are definitely higher than they used to be, and my record is cleaner than it used to be. However, the cost was over $1,200 in payments to them for cleaning up my credit report. So, what did they deliver on? My Equifax score went up a whopping 120 points. This was amazing, and I was really looking for similar results on the other 2 bureaus. Unfortunately, Equifax was a lucky shot because TransUnion went up 52 points and Experian only went up 42 points. The company itself was quite easy to work with. In fact, mid-pandemic, I asked them to suspend my account and they did. A few months later, I went back to see if they could clean up anything else, but this was fruitless, as they did all of the big moves inside of the first 4 months. As such, my recommendation would be to use a company like this for a few months, then drop them. If you want to pursue a deeper cleaning, then sign up for a pay-per-removal. It would likely cost more per item, but ultimately cost less than a monthly fee going forward. While they never pressured me into staying, I kept getting paperwork sent to me by the creditors I needed to forward on to them, so I was always hoping to get a bit more removed. Unfortunately, it just didn't happen. How did my overall repair go? On my own, I went from an average of 575 starting scores to TransUnion 614, Experian 617, and Equifax 610. So I went from worse to bad. Once the score shield came on, they went up TransUnion 666, Experian 659, and Equifax the whopping 720. In the first 3 months, they had a majority of these scores already done, and by the 4th month, they had done all of it. These days, they just maintain my monthly payments, and these numbers can tick up slowly as I lower my overall DTI by paying off my wife's car and our last personal loan. When I was writing this script, I tried for the first time to get a simple credit card and was denied. Yesterday, I received a letter in the mail that told me why, which of course is as vague as it always is, and it said the same thing that it always does, that I was a risk. Thanks for being so descriptive. Now I can work on that. As usual, I became enraged and just paid for it all with cash. While I wanted to take advantage of the 0% interest rates, these banks and lenders just make it so complicated. But in general, you will be happier once you start living a cash-based life. Either you have the money for what you want, or you don't. You won't have to have any bounce fees or late fees or minimum payments that you need to deal with. If you pay for everything with cash, you'll be so much happier. The past year, I bought a mattress, couch, and a new camera gear all with cash. It's expensive, so I would rather have had payments and a 0% interest. But hey, whatever. I had wanted to do this video for almost a year now, and I really thought that the results would have been better by this point. It's nice to have the credit cleaned up, but for what the agency actually charged, $720 in the first 4 months, it just wasn't worth it in the long run. The first time I tried to use the credit a year and a half later, I got denied anyway. So, if you found this video helpful, please give this video a like, subscribe, and leave a comment. If you really like the content, then click the notification bell. Thanks for watching.